Hello, this is John Burford here, and this is another short video on how I use Fibonacci's in my analysis to pinpoint very precise trades, either to enter them or to exit them. This is Tesla, one of the most popular shares, I believe, that is currently traded. And we've got had the rally back up here to the 380 level. Now the 380 level has represented what I call the roof of the Tesla chart, because it's hit the 380 level multiple times in the past and has never penetrated it. So it's a very solid line of resistance. Now this is the latest hit here. That's back in December, and we've seen a very sharp break of the uptrend line. It's moving down very sharply here to the low here on I think it's 26th of December, right there, just after Christmas. And from that point we've had a very erratic rally. 1, 2, 3. That could have been the extent of the rally before the move down again, but no, it moved down to here, found support, and moved up here, and it was roughly at that point there that I realized that the ABC pattern I was looking for was really, I think, the best guess would be the A wave here, this would be the B wave here, and it was rising into the C wave. So I'd be looking for the C wave anytime from this point on. Now, it's been a very choppy C wave, extremely choppy, which is fairly common. In fact, when you see a choppy C wave at the end of it, like this, then you can be pretty sure that the decline out of it, or the reversal, will be very, very sharp. And this is precisely what we've seen here. I've got the line here joining these highs. There's 4 touch points on that one there, and this line here is joining the lows. So any break out of that channel would be quite severe. The market actually, this is the 62% retrace, and in common with many shares, it just overshot it somewhat, not by much, but by a little. So at this point, I was looking for a reversal. And sure enough, we got a break of this line here, and it's moving sharply down here to confirm the 62% as the reversal. Now this is wave C. We've got wave 1 down here, and an A, B, C, and that's wave 2. So that's wave 1, that's wave 2, and the very sharp decline here is a confirmation that we're in wave 3 down. Now very briefly, I want to show you the chart of BP. It's actually been declining for some while as the oil price has been on the slide. But recently we've had a recovery in oil, but it's a lovely looking wedge. I'm joining these high points here. There's 4 touch points there, 1, 2, 3 touch points here. It met this bottom tram line, which is a very long-term tram line, and from there we've seen a bounce. And at this point here we've had a break above it. It's pulled back to make a lovely kiss on this line here, which is a typical action. Once you get a break, you sometimes get this kiss, and that's an excellent place to instigate new trades, in this case long. And so I was buying down here, and I'm looking for a move up here. And one of the giveaways that this was a low was this action here in the momentum. You see there's a big momentum divergence, and whenever you see that, then you can be pretty much assured that the recovery is going to be quite sharp. We've seen it so far here, and I think there's a lot more legs to this trade.